All right, for months now, the number one topic when people ask about real estate are rates. And I like to drive the narrative. Rates are driving the conversation. I like to drive the narrative this way about real estate, is that having a conversation around numbers. What do I mean by that? Supply and demand. Supply and demand. That's our job as real estate experts, is to interpret the market. And then we have strategies. We have strategies for our selling clients, what tier to help you capitalize on that investment, and for our buying clients, how we can help you find the best piece of real estate, get that return on investment. Also, we're branded by resale, but potentially even just winning, okay? And that could be just getting the seller under contract, maybe with some aggressive price terms and those things. But again, back to having a conversation around numbers. I think that's really important because we lead with value. And Kathy and I were able to attend a conference, my coaching group, in October in Nashville, and we heard from a lender who she invited to talk to our group just a few days ago, and he's an economic junkie. I love it. But he really breaks it down in really a connective form. When we're talking about rates, we start with consumer sentiment, okay? And how that then relates to the 10-year treasury, and then how that relates to rates, okay? So we have a new administration. We're turning the corner now post-election. The forecast is actually looking very, very positive that the U.S. economy is poised to maybe outperform, what some are predicting, okay? So, but who knows, okay? We don't want to get ahead of our skis. Short term, they're predicting volatility still with rates, but long term, some are taking the long ball, 12 to 18 months, we'll probably see. Then the rates come down a little bit, but who knows? Here's what I would say. Again, facts over feelings. Watching the market, okay? Right now, even the metrics in the housing market index. I think, again, post-election now and what people are forecasting and freeing up of money, deregulation perhaps, more competition in the market, is that we can already see, they've always said, watch the developers, the real estate developers, because that's build, baby, build, okay? Just baked into that. And so why is all of this important? So rates, who knows? Maybe more volatility here, short term, up and down, up and down, up and down. Long term, I think many are predicting that the rates will come down, okay? But because inflation, they're gonna work on that, coming down, those things. But I would say this, for sellers and buyers right now in the here and now, what we know, here's what we know. For sellers, fourth quarter and first quarter, great quarters to enter, to time into the market, because conventional wisdom, many sellers are not timing into the market around the holidays or turning into the new year and planning to go on the market. For you sellers, that means less competition, okay? Demand is pretty constant, okay? Pretty constant. Conroe is one of the fastest growing cities in Texas. So that affects Montgomery County as a whole, not just the Woodlands. I'm not just talking about the Woodlands right now. Conroe ISD, #1 employer. Okay, so very strong demand, okay, growth, development. There are also developers, new communities, a lot of new home builds coming, and that's going to affect also sellers in this regard. New construction could be your competition. If they're not just settling, the Woodlands is mostly resale. But if someone's just looking at a commute time and want to be 30 minutes to wherever I'm working, maybe it's medical district, okay? Maybe it is downtown, but they want to live up here just because Montgomery County versus Harris County, taxes, whatever, insurance, whatever, okay? So, but sellers, that's why it's a good time before you're potentially competing with more sellers, including new construction. Buyers, why is it a good time? Well, Barbara Corrigan, who Nathaniel Bittman reminded us, this is the lender from Florida, that, she has said, Mrs. Shark Tank, when rates go down 1%, property values go up 10%. I don't necessarily disagree with that. So buyers, why is it, if you wait, you're going to pay more. Okay. Anyway, I just wanted to give you that snapshot. I hope everyone's having a wonderful week, and we are heading into Thanksgiving soon.